Okay, so today we are going to talk about how to place an order on your exchange. On the exchange, that's one. We're going to talk about how we manage risk. How we manage risk. Yep, how we manage risk. I think basically that's what we'll be talking about today: risk management and how to place order on the exchanges. We'll be talking about those two stuffs today. Okay, so that's it. So now that Shuli has finished with her KYC, I'm going to pull up a chart and we'll use a chart as an example, as if we want to place an order, as if we want to place an order. So this is Ethereum, and let's not concern and let's go straight to Bitcoin because it appears that that's a breakout going to happen on Bitcoin anytime from now. So let's look at Bitcoin. Let's look at, okay, I think it's already happening. It's already happening. So this is it. We are looking at Bitcoin coming to 98,000, this region. Can you see my screen? Oh, I've not started sharing. Sorry. I'm so sorry, please. Okay. Can you see my screen, please? Let me know if you can see my screen. Can you type on the box? Let me know if you can see my screen. Or you can just speak up. I need response, please. Can you see my screen?
Yes, sir.
Okay. Okay, so we are looking at this region now, this region here for a moment to reverse the move. So we are saying that this move should come up here, come to somewhere here, and reverse it. So that's what we are looking at. That's how we want to play the game today or tomorrow. It could happen tomorrow. So now we want to make some money. This move now going up, we want to make some money going up. So what do? And we want to set a trade on your MEXC or on our BitGet accounts. Like me, I use a BitGet account and you use a MEXC account. So what do? Now there are two types of order. If you check we are actually doing this part of the curriculum right now. We're on this part of curriculum right now. 1 second, please. We're on this part of the curriculum. We are on what is the stop loss, limit order, market order. That's what we are talking about now. Okay, so now we want to set an order. We want to set an order. First and foremost, let us identify the price. We want to buy Bitcoin at a particular price, and when it gets to this region, we, we sell. And from this region again, we start selling. When it gets to another region, we buy. So I will go straight to the points now without wasting much time. Now, Bitcoin is already pulling. If I want to take this trade now, if I want to take this trade, this is just normal stuff. We are not doing much analysis. I would say I want to buy Bitcoin at the current price. I want to buy Bitcoin at this price, like right now, because the setup is a setup that shows that we are going up. I think I should even be buying Bitcoin. I should be in this trade safe, to be honest with you. I should be in this trade like right now. Uh, so what do I do? First and foremost, it is not a matter of where the trade is going to, how much I could make going up. The first thing that comes to our mind, or the first thing we must think about, is how much am I willing to lose? How much am I willing to lose? That's the first thing that comes to your mind. Now, the general principle is this. The general principle is this. You only allocate 1.5% or 2.5% of your total account size for your risk. 1% or 2% of your total account size for your risk. What it means is this. Let me go to my calculator. Please, let me know if you are following me, please. You can just drop a message or just use a voice call. Maybe just unmute yourself and speak.
We can.
Okay, good. So 1% or 1.5% or 2% of your account size. So what it means is that, what is 2%? 2% is 2 divided by 100. 2 divided by 100. That's 2%. Now, if you have $100 in your account, in your exchange, like surely if you have $100 in your Mexi account and you want to buy Bitcoin, how much? It's not, the question is not how much should you use to buy. No, that's not the question. The question is how much should you allocate to lose? Because that is the most important thing. That is the most important thing. Not how much you can gain, but how much you have allocated to lose in case it doesn't go in your favor. It is a game. This is a game. You have to protect your capital. It's just like you are doing buying and selling. Madam Shuri, you should understand me better. Or Olale, you should understand me better. If you are doing even a regular business, your capital is what you must protect. It doesn't matter how much you are making as profit on top of that capital. Please correct me. Am I wrong or right? The the major thing is to protect your capital, isn't it? Let's communicate, isn't it, guys? It's to protect your capital. Now, when we are, it also applies to the trading world. It's not because you have 1 million, you have 100,000, you have 500,000. People are telling you that you can make bastard money in trading, and you just take, okay, you say, okay, I divide my money into two. I use half to take it. That's not the way it works. If you use half to take it, that means you only have two opportunity, and the two opportunity actually you can lose, and your 100k is gone. So the general principle is allocate only 2% or 1.5% depending on how much your capital is, as stop loss, or what you are willing to lose. Now, if you have $100 in your account, Madam Shuli, and now what happens? You said, okay, I want to buy Bitcoin now, and I want to allocate only 2% of this $100 in case my calculation is wrong And in case I lose this trade, I will only be losing 2% of my $100. 2% is 0.02 times 100. So it means that you will only be losing $2. I don't know whether you understand. You will only be losing $2 of your $100. You see the way now you are protecting your capital. Are you understanding how it works? You see the way you are protecting your capital, just in case the trade doesn't go well for you. If at all it eventually hits your stop loss, you only be losing $2 out of your $100. Now let me ask you a question. How many times would you have to lose before you eventually blow your $100? How many times would you have to lose? If for every trade, let's assume you take multiple trade and you are losing, how many losses will you have to take before your $100 will eventually dry up? Please, I need a response. How many trades would you have to take? You can unmute yourself and speak, please, or you can type on the chat on the box. Yeah, I'm waiting, please. If you are speaking, I can barely hear you.
Okay, I said like 50 times.
Yes, that means you will have to lose like 50 times for the entire $100 you have to disappear. What are the chances that you will lose 50 times in a row? What are the chances? The chances are very slim. The chances are very slim that you will lose 50 times. So what it means is that your $100, by the time you lose like 10 times, you have only lost how much? You have only lost 2 times 10, $20 inside your $100. By the time you lose like 20 times, then obviously it is clear that you need help. You need somebody to help you, isn't it? You will pause. You will pause and say, this one that I'm losing like this, it's like I've not really understand this thing well. Oh, let me wait. You can see how you have successfully saved your $80. Now you are getting the idea, guys. Are you getting the idea? Trading is like, if you approach trading like a general normal business, you will not lose the way people are losing. Okay, fine, Olale. So it's going to, Madam Shuli, it's just me and you that we are here now. Because Olaleye is not feeling too fine, so he will watch the recorded version. But notwithstanding, please stay with me so that I can explain some things to you. So,
Alright, sir.
what it means that if after 20 trades, okay, Olaleye, it's all right. Please get some rest. Health is more important. If after 20 losses, if after 10 losses, you have incurred, if you lose 10 times, you have incurred $20 losses. After 10 trades of continuous losses, then you will tell yourself that, oh, it appears that I need somebody who knows these things better to come and put me through. Let me wait. What you have successfully done is that you have successfully saved $80 after 10 trades. So the idea is always to approach the market like you are doing your normal buying and selling business. The aim is to protect your capital. Your capital must be protected. Now, another thing that helps is what I want to show you now on the screen. Let me know if you can see it, Madam Shuli. Sometimes when I trade, like in those years when I was trading actively, because these days I don't trade too actively, I just wait for bigger targets and I just hit it big like that, and still with good risk. But when I was actively trading, I have an Excel sheet where I record every trade I take. It's just like you have a shop, you are selling items. Obviously, you need to have a sheet, you need to have a book where you will be recording what you sold, how much you sold, possibly how much profit you made on that item. Isn't it, Madam Shulamite? Isn't it?
Sir, yes, sir.
So, this was mine. This was mine. I'm sure you can see my screen. It's still coming up. Okay, you will not be able to see.
Yes, sir.
You should be able to see my screen. What are you seeing on my screen? Are you seeing any Excel stuff on my sheet, on my screen?
I can
Okay, it's up now. Fine.
see record.
Yeah, so this is my trading. Look at it. This was in May 2024. This was not when I started, but this is just one of the records. If I check, I still have other records. But this one was, I was active on this particular Excel sheet. May. This was a test, kind of. I was testing something. And I started with $13 sometimes in May. And this was my record. This was the trading pair. Bitcoin, front. These were like all the trading pairs I was trading. And September of 2024, May, June, July, August, September, 4 months later, I have successfully raised my $13 to $30. Do you understand? $13 to $30, which is like in 4 months, I raised my account about going to about 150% or 120%, because 13 plus 13 is 26, right? So that is
Yes.
100%.
Yes.
So about 110% in 4 months. Did I lose along the line? Yes, I lost. I was losing. I lost. These were my losses. These were my losses. I lost along the line. I lost along the line. But I was making small gain. Small gain. I was losing. I was making. But cumulatively, my account was growing. And why was this? Why was it like this? I had a record. I treated it like a business. I managed my risk. And I stuck to my plan. I was not waiting for one big money. If you can see, even when I had 23 cents, less than $1, I was leaving the trade. I was leaving the trade. Even less than $1, I was leaving the trade. I was recording it. I was recording it. You understand the point? So
Yes.
these are some of the things that when you do, it helps you treat trading like a business, like a normal business. You manage your risk, you protect your capital. Forget whatever story people talk about trading. You can make it big. You also hear of story where people have lost it and they are back to their village. It's because the one thing that they needed to protect, which was their capital, they did not protect their capital. They were greedy enough. They didn't have records. They didn't protect their capital. And one day, boom, they saw a move and they dumped all their money into it. And the move went the other way around. And they all lost everything. And that was it. Game over for them. So, back to what I was saying. So, if you have $100, 2% of $100 is just $2 we are allocating. We want to allocate $2 now to this trade. So how do we do that? How do we do that? So now, assuming we have $100, and now I said I want to buy Bitcoin at this price. This price. We have talked about other block before now. At this price, I want to buy Bitcoin at this price. I'm sure you can still see my screen.
Yes, sir.
Okay. I will try to make it short. I will try so that it doesn't get too boring. So I want to buy Bitcoin at 96,500. 96,500. 500. Now the question is, where will my stop loss? When you hear the word stop loss, Madam Shulamite, it refers to, in case this move now start coming down, and my order gets filled, it pick my order gets activated, and now instead of it to start going up, rather it start coming down and down and down. I've started losing money. Okay, if we get to this place, take me out of the market. I don't want to lose more than these points. Do you understand the idea?
Yes, sir.
So it's automatic. I enter a trade here, bam. Normally I expect that it should go up from here, but the thing starts still coming down, and you say no. When we get to a certain place, let's assume that, okay, this was the last point. Let us assume that now this is it. Now look at this candle here. This was the last point. If
Yes,
this move gets to this point, let me put it red so that it's clear. If this move now start coming down like this, when this move starts, normally when it gets here, it's supposed to activate my order and start going up, and I will be happy that, okay, we are making money. But let's assume that it starts coming down. Yeah. Oh, when it gets to this point, please, this market, before you give me heart attack, take me away from this trade. I want to lose only $2 by the time it get to this place. Do you understand the idea?
yes, sir.
Is it clear? No, let me know if it's not clear.
No, I understand, sir.
Good. So that is what is called stop loss. Someone is trying to join the call. Let me try to. So welcome, Hamza. So that is what is called stop loss. Welcome, Hamza. You can unmute and speak if you are able to. Otherwise, you can drop a message on the box. Okay, so let's proceed. So now what we are now saying is that we want to take a trade, Madam Shuli and Hamza. Good evening, welcome. From this point,
Yes.
we are hoping that it will go up to, I'm coming. We are hoping that, because the setup look like something that will go to 98,000, which is around this point. So we are saying that, okay, activate our order at 96,506. We are buying at 96,508 rather, and we are projecting that this move will go to 98,000, which is about 1% move. Now we are also saying that peradventure this move does not go in my favor. Instead of it to activate my order and start going up, when it start coming down, when it get to this point here, please, I cannot afford to take any more losses. Take me out of the market. Let me have peace of mind quietly and go and sleep. When the price is 95,309, I only want to lose $2. Take me out of the market. I only want to lose $2 because my account size is $100 and I want to lose only 2% of that $100, which is $2. I cannot come and kill myself. Do you understand?
Yes, sir.
Good. Now the question now is, from here now to here now is what we call, this place, this red line now is what we call stop loss. So this is your entry price, 96,509. This is your stop loss. That is to say, stop me out of the market at this price, and I'm ready to lose $2 because my account size is $100. So this is your entry price, and this is what your stop loss. You get the idea?
Yes, sir.
Now, how do we now do it? How do we now calculate it so that what we will only be losing will be $2? Because from this point to this point is a big gap. You can actually lose all your $100. In short, you can lose all your millions of dollars between these two gaps. So how do we calculate it now so that we can lose only just $2? Only just $2. Now, please pay attention to this. I will try as much as possible to repeat myself.
Okay.
Look at this. There is a calculator on your trading view. We have talked about trading view. One of the features of the trading view is your measuring tool. Your measuring tool, rather.
Okay.
Look at this point here. Put this line here on your entry price. Drag
Yes,
it
sir.
to your stop loss.
Okay.
How many percent is that? Can you tell me? How many percent can you see here? Minus what?
Minus 1.25%.
Minus 1.25%. Now, don't suffer yourself. Just come to your calculator, JJ.
Okay.
What we want to know now is leverage. Leverage. Are we stop sharing the screen? Can you
Okay.
open your, or you know what? I will share my screen with this other device. I want to show you
Okay.
something. I want to show you something. Leverage. Now we are talking about leverage. Why am I having headache?
Sorry, sir.
1 second, please. I'm having serious headache. Okay. So 1 second. I want to share my screen.
Okay, sir.
We will come back to this, but let me stop presenting so that I can present with my other device, so you get to see what I'm talking about. So this is my Mexi account. Let me see if I can turn it so that it can be bolder, if it work. Okay, it's not working that way. Okay, so that's my Mexi account. Now,
Okay.
if you notice on this bottom here, you have trade, you have the home, you have the market, you have trade, right?
Yes, sir.
And you have futures.
Yes.
Today we are going to talk about futures. Another day, remind me, we will talk about the normal trade, which is
Good.
spot. But today we will talk about futures because we want to learn a little about leverage. Now, on the top right corner, you will see something like 50x. 50x.
Yeah.
Let me cancel it. You see something like 50x on the top right corner.
Yes, sir.
Good. So that is what is called leverage. This leverage is variable in the sense that it can change. You can reduce it, you can increase it. What is the function of this leverage? Simply put, you have $10, Madam Shuli. You are saying that Mexi, this my $10. I want you people to borrow me 100 times of my $10. 100 times, then you will put it in 100. Are you getting it?
Yes, sir.
So they will borrow you 100 times of your $10. 100 times 10 is how much? That's $1,000, right?
Yes, sir.
So instead of you to be trading with your $10, you will actually be trading with $1,000.
Okay.
But don't forget that they borrowed you. The implication is that the higher the amount they borrow you, the
Yes, sir.
quicker your $10, the higher the amount they borrow you, the quicker your $10 will finish.
Okay.
The quicker your $10 will be collected if the trade go on the opposite direction. Do you understand?
Yes, sir.
The higher the amount they borrow you, the quicker your $10 will disappear from your account. They will liquidate your $10. They will chop your $10. The quicker they will chop your $10, if the leverage is high, that is, if the amount that they are borrowing you is high. Do you understand?
Yes, sir.
So now, if you put it in 50, for example, the rate that they will chop your $10 in 50x is slower than the rate that they will chop your dollar when it is, they will chop your $10 when it is 100x. Don't forget that they are borrowing you the money. Oh.
Yes.
If you put it in 100, it will be slower. The way they will chop your $10 in 100x will be slower compared to when you put it on 200. Are you understanding how leverage work? So
Yes.
it is a variable. Now the question now is, we will close this chart. You can see that it's a slider. So that means that they have
Yes.
given you the opportunity to choose which of this leverage will I use, that at the end I will lose only $2, which is 2% of my $100. Do you
Okay.
understand?
Yes, sir.
Now I will stop sharing so that I will go back to the chart. How do I even stop sharing? Okay, good. So now let me go back to, don't forget what I said. Which good. Now you can see my screen back. Now you have identified your entry price now as 96,505, and your stop loss, don't forget we said we are talking about entry price, stop loss, your limit order, your market order. We will talk about that, but now the three we are focusing on now is our entry price and our stop loss. We have talked a bit about the leverage.
Yes.
Now you understand how leverage work.
Yes,
Now
sir.
you say that I want to buy Bitcoin at this price, 96,505. When this
Okay.
thing starts, instead of as it hits my entry price, when it start going up, yes, I'm happy, I'm making money. But when it start coming down, I'm losing money. Hey, I'm losing money. Oh, when it get to the place, I want to lose $2. Take me out of the market. Fine. Now, how do we ensure that you are losing $2? You take your measuring tool, you come here, measure, you see that it is 1.24%, right?
Yes, sir.
Which leverage do we want to use so that at the end of the day we will lose $2? Come to your calculator. Now type in this percentage. Now we are going
Okay.
to be checking at random the leverage that we can use. 1.24%. This is my percent here. Sometimes you see it doesn't used to work.
Okay.
1. Okay. Just type 1.24 times. Let us test with. Can we use 10x? Remember that thing has from 1x to 400x, right?
Yes,
Now,
sir.
can we use 10x? Okay, let us test with 10x. Okay. If we test with 1 second, please. Let me be sure that I'm not making a mistake.
Okay, sir.
Okay, so let's assume that it's 1.24. Let me come again. So 1.24 times, let's say we want to use 30x leverage.
Okay.
That's 37.
Point.
Hold on, the thing is confusing my head sometimes. Job, is Job on this call?
Yes, I am.
Okay, please remind me again. Sometimes I'm very bad with these figures. I'm trying to calculate the leverage I would use for a difference of 1.24%. My calculator though is crazy, yeah.
That's 1.24,
Yep.
1.24 times. You vary it.
Okay.
Um, you try to vary it, multiply it with something so that you can have 50%.
Okay.
So let's just say 45. I think
Let's
45
say
should be or 40.
45.
Either 45 or 40.
Okay, now we have
Okay, try.
55. Okay.
So it's above 50. So you have to try something like
Good.
40.
So thank you. I think
So
my brain has
1.24 is
my
40.
brain
Yeah.
has come back. So, Madam Shuli, so like I was explaining, and to whoever is listening, this is 1.24. 1.24. Don't forget that we are trying to know what amount of leverage we will use so that we can only lose 50%. Take note of what I want to say now. We
Okay.
can only lose 50% of the money we want to use to take this trade. Let me explain again. Remember that I said that between your entry price and this price, you want to
Yes.
lose only $2, right? But
Yes.
it is not that $2. It is not that $2 you will use to take the trade. That $2 is only the amount you want to what? Lose.